Today, we are talking about yet another way you can add yield into your portfolio. During times of uncertainty, this could be a good way to play it safe, but we've covered things such as GICs, high interest savings accounts, but this one may be the best of all. So stay tuned as we go through 2 ETF plays that you can do here on the Toronto Stock Exchange to get yield into the portfolio and have a little bit of security. First and foremost, let's figure out what a money market fund is, and we jump over to this article and we see that one of the defining characteristics of a money market fund is that they typically focus on highly liquid securities. Now, what are those? Cash funds, treasury bills, and bonds. And that means that they can be changed back to cash quickly. So one of the key differences here is that we're not putting this money into a savings account. We're not investing in government bonds. We're using some a little bit more riskier ways to invest, which is going to give us a higher yield, but still very low on the overall risk profile, especially when you compare it to equities or stocks. To get more specific on what these actually hold, we can see here that they're bankers' acceptances, a payment that's guaranteed by a bank after a certain period of time. You have commercial paper, which are bonds that are particularly put out by high quality companies. You have federal and provincial bonds, and then you have treasury bills. So a little bit outside of a savings account, and then again, not a government bond in its entirety. More provincial bonds do pay a higher yield. And it is important to note that when people want short-term savings, they can also turn to GICs and high interest savings account like we mentioned. But money market funds actually often outperform these other 2 savings vehicles. Now, these aren't going to be deal breakers over the long run. And when we take a look at the first ticker, CMR.TO, it's an iShares product, the premium money market ETF. We can see the performance over the long run is not the greatest, 3% over the past year and trailing downwards over the long run. But these are specifically important in this current time period when economic uncertainty is the biggest risk. And if somebody needs to add that yield or that dividend into the portfolio, this could be one of the safest ways to do so. So we'll take a look at what are in the holdings just to get a better idea of what is being held in these ETFs. And we can see that there's some Canadian government bonds making up a large majority of the portfolio. You have that provincial bond that we talked about with Manitoba. We have a Toyota Canada Credit, and this is one of those high quality companies that we just talked about, and then some bank bonds in here, etc., etc. So this is where your money is going to be invested, and again, not as risky as what a stock would be, because bonds typically pay out at their annuity or when they're done. Some key facts about this ETF: it is paying a 4.83% yield, which is very good in comparison to what one of those high interest savings account ETFs that we've covered in the past are paying. When we look down at the MER, it is a very low cost of 0.27%. So they're not taking too much of a fund, and a great low cost ETF option to add into your portfolio. Now, it is important to note that these are short-term investments, and we can see here some of the timelines and percentages of how long they will be invested. And why this is so important and why this is so crucial for the time being is that with interest rates being high, the yield curve being very slanted on the short term, and we can see here from this chart that the yield curve is sloping very much downwards, meaning that you can get a higher interest rate for short-term bonds, for short-term paper. This is one of the best ways to take a look at why this is so important, because we see everything below this 2-year mark is definitely yielding above 4%. As you get longer into the longer dated bonds, that percentage declines very rapidly. So that's why when we take a look at some of these numbers, that's why this is making sense and why it's clipping almost 5% yield on this particular ETF. Now, what could be a potentially better way to play this is that BMO has a product, ZMMK.TO, on the Toronto Stock Exchange. And this one is paying an annualized distribution yield of 5.04%. So definitely higher than the iShares product. And the management expense ratio is relatively the same at about 0.28%. So this one is definitely the winner in regards to what it's paying on a yield perspective. But when we throw these both into Yahoo Finance, into a comparison chart, we can see they have relatively similar performance over the past year. I don't know if you can go wrong with any of these particular programs, but realistically, some of the benefits, if you bank with BMO, I know they are offering 0% commission if you buy their ETF products. So make sure to take that into consideration, because obviously those fees, those commission fees to buy could add up over the long run. Now, it is important to note that I currently do not hold any of these. For me, my long-term perspective is I have cash waiting in one of the high interest savings accounts. I'm going to hold it there until I find the right opportunity to buy. But if I am looking to get yield, if I am looking to supplement income, if I'm looking to retire, these could be potentially good products in the short run, as long as interest rates stay high and we're kind of dealing with the economic uncertainty that we're dealing with today. Obviously, Canadian inflation came in higher than expected, seeing a little bit of an uptick there. So I'm not entirely sure of where we're heading. Is the Bank of Canada potentially going to raise interest rates again? That would definitely help out these products. It would also help out the high interest savings and GICs as well. But again, the money market will be the best out of the three, especially in the short run. So if you like this video, if you like this content, make sure to check out some of the other videos that I've done, especially the top 3 high interest savings ETFs, and as well as the top 3 Canadian dividend ETFs on the Toronto Stock Exchange. I hope you enjoyed the video. Have a great week in the markets. Happy trading.